Hey everyone, Jeff McGinnis at CrossCountry Mortgage. Want to have a conversation with you guys today about a conversation that I've had over and over again over the last couple of weeks, and it's been really interesting that I've been having it so often enough that I thought I'd shoot a video for reference. Um, Let me frame this a little bit. So people are coming to me and saying, "Hey, how long is my pre-approval letter good for?" Or when should I pull credit? And they're very concerned about getting a credit pull, and they're very concerned about getting applications done too early. So let's talk about the pre-approval letter and the pre-approval process and the spirit of the pre-approval versus the mechanics of the pre-approval. So when you should get pre-approved is if you're looking for a property. So if you're out looking with your realtor or you're a realtor and you're showing buyers, your buyer should be pre-approved, period. That just is definitive. It helps everybody out, right? If you're not looking or curious, then you don't necessarily need to be pre-approved. But the spirit of the pre-approval letter is to take a snapshot of somebody's financial picture, right? So we're looking at credit, we're looking at employment, we're looking at cash to close, right? And we're verifying that data to write a pre-approval letter. So we're pulling credit, we're looking at bank statements, we're looking at W-2s and pay stubs, and sometimes we're looking at tax returns as well, depending upon how people get their income. So we're taking a snapshot, day and time, and writing the pre-approval letter based off of that particular picture, right? So that is on our pre-approval letters, we say, you're good for 90 days. So that's a mechanical thing, right? So this is a pre-approval letter that's good for 90 days. But the spirit of being pre-approved behind that letter is as long as your credit and your employment and your funds to close are at or better than the picture that we just took, your pre-approval letter can last ad infinitum, right? It can go on in perpetuity, right? What happens though on the mechanical side is the documentation expires, right? It's kind of like milk, right? Some of the documentation expires. So if we need 30 days worth of pay stubs, then every 15 days, one of the pay stubs will expire. If we need 60 days of bank statements, then every month, one of the bank statements will expire. And if our program or product says, hey, you need a new credit report before the day that we close, then we need to plan for that as well. Okay, so there is an expiration for all documentation and credit reports, but as long as the spirit matches the mechanics, we're fine, okay? So tell yourself if you happen to be a buyer, or tell your realtor, or tell me if you happen to be pre-approved with me, if anything changes, is if you go buy a car on credit, or if you go have a speed bump and you need to make a big payment on something, you have a medical issue that requires a large payment, if you have less assets or you get a credit hiccup or anything, let your realtor friend know, let me know. We can help you navigate and make sure that you don't inadvertently lose earnest money. So I just wanted to have that conversation today. I know today's video is a lot longer, but I think it's an important conversation, right? So today, just to sum up, the spirit of the pre-approval versus the mechanics, making sure that we make that snapshot. And if your situation is at or better than that snapshot, we're fine. And then once we get closer to finding a property, gosh, we really need to update any expired documents. So hope you have a great day and a great week. Feel free to give me a call if I can help or answer any questions. Talk to you soon.